Our final company this evening, our South Africa-based rare earths company, Rainbow Rare Earths, or RBW. Rare earth metals are an essential component for permanent magnets used to construct motors and wind turbines, and most rare earths are found in China. Rainbow have two main low-cost, high-quality projects, the Phalaborwa Gypsym Stacks in South Africa and a trial mine at Gakara in Burundi. Rainbow have just raised 6.4 million in a placing. And here's CEO George Bennett. He's coming live from South Africa tonight to summarize the most recent deals and activities for us. All right, over to you, George.
Thank you, Donald. Good evening, audience, and thank you for taking the time out this evening. Just to go through my presentation, is the disclaimer for all of us to take note of. And then, as Donald has mentioned, that rare earths are critical to the green revolution that's taking place around the world at the moment. And by that, what I mean is that we all know that there's government legislation driving electric vehicles in Western Europe and in the UK, and we also see worldwide emission control standards being adhered to or going to be adhered to, with everyone signing the various protocols around the world. And there's massive push for green energy in the form of solar and wind turbines to try and get the world to meet these emission control standards that everyone has set themselves. We all know that in the UK, they're talking about no internal combustion engine vehicles being sold past 2030. France, I think, is 2035. Volvo have already said that they will not produce an internal combustion engine motor vehicle past 2030 either, and I'm sure Germany is close behind. Plus, we have all the wind turbine projects that have been spoken about, be it in China, be it in the South China Seas, Germany, the North Sea wind turbine project, and so forth. And all these projects and these new targets for various governments require rare earths. And the key rare earths for the green revolution are what they call permanent magnets. And permanent magnets go into every new electric vehicle, then your standard vehicle at the moment, in terms of your electric windows, your windscreen wipers, and so forth. But very importantly, in electric vehicles, the drivetrain or the drive motor for your electric vehicle requires between 1 and 2 kilograms of rare earth permanent magnets per vehicle, and each wind turbine, 3 megawatt wind turbine, requires about 2 tons of rare earth elements in their permanent magnets. So just to move on, as you can see, the 2 key elements for permanent magnets are known as neodymium and praseodymium, which are 2 of the 17 rare earth elements that we find in rare earth deposits. There's a total of 17 rare earth elements in rare earth deposits, and each deposit has various makeups of these different rare earth elements. As I said, the 2 key rare earth elements are neodymium and praseodymium, and there's also another element called dysprosium, which is also quite important in certain permanent magnets. Now, permanent magnets only make up 35% of rare earth volume, rare earths by volume, but very importantly, 91% by value. And that, you'll see, is very important for Rainbow Rare Earths 2 projects, where we have high values of neodymium and praseodymium in both of our projects. And that translates into very high value for both those projects. If we just quickly move on to global demand for neodymium and praseodymium, as you can see, global demand from 2020 is set to increase dramatically by 2030, and that's, as I said, it's been driven by legislation and emission targets that the whole world is setting itself. And as I said, this is a structural change in global economies, and it's not going away anytime soon. So if anything, it's going to accelerate, and that forecast is probably conservative. We go on to our next slide. Once again, this is just showing you projected annual global electric vehicle sales, which, as you can see, are increasing quite dramatically. And as I said, this is not going away anytime soon. And then, of course, we have permanent magnet which are required in wind turbines. And as I mentioned, 600 odd kilograms per megawatt. So 3 megawatt wind turbine takes up to 2 odd tons of rare earths in the permanent magnets. So that's a huge amount. And if you research the amount of gigawatts being forecast to be rolled out over the next 20 and sort of 10 to 20 years, you'll see this translates into a massive demand for neodymium and praseodymium. If we move on to where we see the demand balance, the forecasters for once got it right in 2020, towards the end of 2020. They forecast that we'd be going into deficit, and we saw this happening in the neodymium praseodymium market, and where we saw prices of neodymium and praseodymium spike, starting in the last quarter of 2020 and continuing into 2021. So as I said, so far the forecasters have got this right for a change. Slide 8 is quite important, where it shows Rainbow's 2 projects in terms of their rare earth baskets. As I mentioned earlier, all rare earth deposits have a combination of 17 rare earth elements in what's known as a rare earth basket. And both the rare earth baskets, we have the Palabora Project in South Africa and the Gakara project in Burundi. We have high percentages of neodymium, praseodymium as a value of our rare earth basket. And you can see the price forecast for our basket that out to 2030 in the dotted line, but the actual price of our basket has outstripped the forecast quite considerably. As I mentioned, towards the last quarter of 2020, we saw the rare earth prices for neodymium and praseodymium rise quite sharply, and they've continued to maintain onto those rises. And the forecast for 2022 is that there's going to be continued price appreciation of these 2 key rare earth elements, as well as dysprosium and terbium, which are quite important rare earth elements. Now, if I can move on to our key project, which is the Palabora Project. This is a project in South Africa that comprises of plus minus 38 million tons of gypsum residue. And the gypsum residue grades at 0.43% total rare earth oxides. Now, this might sound quite low, but when you compare this rare earth resource to ionic clay deposits in China and elsewhere in the world, you'll see that that grade is significantly quite high, between 0.42 and 0.46% TREO. As I mentioned, these gypsum stacks are situated in Phalaborwa because for a period of 50 odd years, next door, we had a phosphate hard rock deposit being mined for phosphate. The phosphate hard rock was converted through a flotation process into a hard rock slurry, and then piped next door to a phosphoric acid plant, which was run by Sasol, the chemical conglomerate in South Africa. This phosphate slurry was the feed for, as I mentioned, this phosphoric acid plant. And the phosphoric acid plant went through 3 stages of phosphoric acid production. And in each of these stages, a gypsum residue was created. Now, the rare earth elements were present in the hard rock deposit at Phoscore, but not in economic quantities. And with the formation of a phosphate concentrate, this was through a flotation process. Your rare earth elements were upgraded in the phosphate slurry, and then, as I mentioned, transported next door to the phosphoric acid production plant. And in the 3 stages of phosphoric acid production, the gypsum residue that was eventually sent out to the waste stacks after the 3rd stage. At each of these stages, the rare earths were further upgraded in the gypsum residue that they now are present in economic quantities. Very importantly, we've got very low uranium and thorium, one of the lowest of any project in the world, and that makes this a very green project and has huge ESG credentials. Another thing to remember is that these 2 gypsum stacks that we have at Palabora, as I mentioned, totaling 38 million tons, they have an environmental management system in place, and we will be cleaning up these gypsum stacks and redepositing a clean, benign gypsum on a new gypsum stack to RFC standards, which makes this project a very big ESG cleanup project and very green. If I can move on to this next slide. This demonstrates why we believe that this will be a very low capital intense project, because the gypsum that sits on the chemical stacks is basically in a cracked chemical form. Now, if you research any rare earth project, you'll see that they have to mine, crush, mill, produce a rare earth concentrate, then they have to crack their rare earth mineral into a chemical form before they can do downstream processing. Sasol were able to go straight in their pilot plant that they built some 7 odd years ago. They're able to go straight downstream and produce a mixed rare earth carbonate, because the gypsum sits in a cracked chemical form. So all your costs associated with hard rock mining for a normal project, run-of-mine stockpiles, crushing and milling, flotation using reagents to produce a concentrate, and then gang leaching this concentrate, and then you have to crack your rare earth mineral concentrate before you can go into rare earth leaching, which is where Palabora comes in. So we've got very, very low mining costs, because it sits all above the ground as a resource already. It's not mined. This was produced through a chemical process, but it sits on these 2 gypsum stacks. And as I mentioned, we will have a very, very low reprocessing cost of sort of below $1 a ton, whereas a hard rock mining open pit project, your mining and hauling cost, just to give an example, is anywhere between $40 and $60 a ton. So we have a very, very low cost there, and we don't have to go through as many stages as other rare earth projects. And so as a consequence, we believe that this will be a very low capital intensity, a very low OPEX project, just simply for the reasons I've outlined ahead on this slide. We now move to the next slide. You can see also did a deal with KTEC. Now KTEC is a technology in Florida that we have signed an exclusive right to for phosphate gypsum in Southern Africa. And basically what KTEC does is it allows us to go even further downstream at Rainbow. So we can go into separated rare earth oxides. Linus claim that they will be the only scale producer of separated rare earth oxides outside of China. Well, Rainbow will be the second scale project, because we're going to go all the way downstream by using this KTEC technology. It allows us to, with a lot lower capex and opex, to go into separated rare earth oxides. And and we get there in between 6 and 9 steps. Whereas using traditional solvent extraction techniques, we literally have to have hundreds of steps to get to the same rate of separation that we're going for at Rainbow. And very importantly, we only chase 4 rare earth oxides, separated oxides: neodymium, praseodymium, dysprosium, and terbium. Those 4 rare earth oxides will give us 95% of the value of our basket. So we're very fortunate in that. And we'll get there between 6 and 9 steps, as opposed to literally hundreds of steps with a traditional SX plant. This project has been piloted on rare earth phosphogypsum for rare earths in Florida. And in North Africa, it's been piloted on a large bulk scale on phosphogypsum to remove uranium and thorium, and we know it's been successful in North Africa. So we believe this project is largely, this technology is largely proven, and before we finally incorporate this into our project at Palabora, we'll also pilot test it on site at Palabora, where we have a pilot plant as part of our JV agreement with Bosveld. So we believe this project is largely, this technology is largely de-risked. And very importantly, KTEC have applied it commercially in a number of other industries like the lysine, sugar, phosphate industry to date. So we believe it has been largely de-risked. Just to move on to where our footprint, our projects against other projects around the world, just a few projects. There, our footprint at Palabora against other rare earth projects of iron and clay in nature. And you can see we literally between 6 and 10 times higher grade, which is very important. And very importantly, you can see our neodymium and praseodymium content parts per million is off the charts compared to those other iron and clay deposits. And the uranium and thorium levels are very, very low. In terms of Rainbow's hard rock project at Gakara in Burundi, once again, a very high grade deposit, very, very high, as I mentioned, the neodymium and praseodymium, as you can see from that table, and very importantly, low levels of uranium and thorium compared to some other hard rock projects in the world right now. If you look at Linus's thorium content, you see it significantly higher than Rainbow. And we all know that Linus has had problems with the Malaysian government, where they've had to build a whole new separation facility in Australia because the Malaysians will not allow Linus to ship their concentrate to Malaysia anymore for downstream processing. They want their radioactive waste to be kept in Australia, where it came from in the first place. If we look at the actual gypsum stacks at Palabora, very importantly, this project sits in the middle of a mining town. There are three operating mines right on the border of Phalaborwa. So we have all the infrastructure available to us on our doorstep, which is an airport, 2 rail sidings, which operate on this site. And on the right-hand side of this photograph, there's a phosphoric acid plant that's been mothballed. I forgot to mention, for the last seven years. It ceased to be operating, but what's intact on the site is all the administration offices, all the workshops, the machine shops, the vehicle storage shops and vehicle workshops, laboratories, and 2 rail sidings, as well as a high power voltage switchyard at the base of the one stack, and all that infrastructure is in place. And this infrastructure on a normal project would represent about 20% of your capital costs. So this is another big saving for the project we have at Palabora. Very important. Just quickly to go through, you can see some of the photographs of the infrastructure, as well as the Sasol pilot plant built and operated some 7 years ago. This plant produced 3 tons of a mixed rare earth carbonate, so it was a pilot plant at scale, and we know it successfully extracted rare earths out of the Phalaborwa gypsum. There's another photograph of the pilot plant, and here's the details of our earn-in agreements that we have at Palabora. So it was a very good deal that we did last year, and we expected to produce a very, very good project in terms of low capital costs, low OPEX, and we're expecting this thing to generate somewhere between $220 and $250 million of revenue. And we have a very fast track timeline for the project. We're busy doing a PEA, which will be anticipated to be complete by the end of this year. And the next year we'll go, in all probability, straight to a bankable feasibility study and to go into project funding at the end of next year to start construction somewhere towards the end of the first quarter or the beginning of the second quarter of 2022. It's a very fast track project for essentially, which is a new project we only acquired in November last year. Just to quickly finish off on Gakara, a very, very high-grade hard rock project in Burundi. We have 57 targets, all of them mineralized, which is key, and we have 7 historical Belgium rare earth mines within our mine license area, very importantly, and these are just after the exploration work we did last year. These are our current exploration targets that we will look to use from cash flow generated from the project within Burundi. As you can see, before I got involved in Rainbow, we were mining on the left-hand side of the screen using literally, this is where the Belgians mined it. I called it artisanal mining on steroids. We had a bit of yellow equipment to remove dirt, and then we hand mined the very high-grade rare earth veins. We changed the mining methodology last year into more conventional open pit mining, increased the fleet to a more conventional style mining fleet, open pit mining fleet. And I'm pleased to say that we achieved cash flow positive territory in June this year, and at the end of June, the Burundi government put us on hold for production in Burundi while we renegotiate the mining convention. Now, we've seen in various African countries, governments look to renegotiate the mining conventions, but something we have to live with. We are due back in Burundi next month to negotiate with the governments the terms of the changes to the convention, and we expect that there will be a win-win outcome for both Rainbow and the government. That's it in a nutshell.
Okay, that's absolutely fantastic, George. So what's going on with the Burundi government? And just shine a little bit of a light into that, and how quickly you think it's going to be resolved, George. What's a positive outcome for you?
As I said, we've received a letter from the Minister of Mines indicating that we will get dates set for negotiations towards the end of November. So towards the end of November, I expect to be back in Burundi in negotiations with the government to get us back to mining, back to exporting, and finalizing the terms of a new convention towards the end of the first quarter of next year. And during that first quarter, I would also expect mining operations in Burundi to continue. I might stress that we have $1.4 million of concentrate ready to be exported, which all the costs associated with that concentrate have been incurred by Rainbow already. So that will kickstart the re-establishment of the mining operation in Burundi without any drain on the corporate G&A from the funds that we've just received from our capital raise that we closed last week in Rainbow.
So Dave Harris is asking, has an export agreement been reached with the Burundi government? But is that the issue? Is it a renegotiating of the mining conventions rather than export?
It's a renegotiation of the mining convention, which will allow us to resume exports and resume mining again.
Great.
But
okay.
I might just stress that Burundi, in terms of Rainbow, is far smaller than what it was prior to the Palabora project coming on. Just to give you an idea, the Palabora project, we expect to generate revenue, as I said, north of $200 to $250 million per annum. And the Burundi project at full-scale commercial production at current pricing will only produce revenue of about $30 million a year. So there's a significant difference in the size of the projects.
No, it's absolutely true that Rainbow Rare Earths has actually transformed. In the time that I've been doing interviews with you, the business has actually transformed. The different deals, the way you've knitted these different elements together is I have to say, is pretty impressive, George.
Thank you.
Let's talk Phalaborwa Gypsym Stacks. Bosvelt. Now, without Bosvelt, you actually wouldn't be able to do all this because Bosvelt actually owned the site and owned the stacks.
Correct.
So talk us through the 70-30 joint venture that you've struck with them, which is one of these great deals that you've done.
Yeah, so we were fortunate enough to seize on this opportunity and have a relationship with the owners of Bosvelt, and basically agree on a deal where they put in the resource and the infrastructure, which is significant, as I mentioned, and for that, Rainbow will fund the establishment of the rare earth processing facility, and for that we get 70% and they will get 30%. And
then the next element you've added on top of that is K-Tech technology, which separates the NdPr from the gypsum, which in itself is a transformational for Phalaborwa.
Yes, well, the beauty of that deal is that if we stop to the mixed rare earth carbonate, which a lot of rare earth projects in the world do stop at, we would only achieve about between 65 and 70% of the separated rare earth oxide price. The fact that we now go all the way downstream to produce separated rare earth oxides means we'll get close to 100% of that separated rare earth oxide. So we get a kicker of plus minus 30% in our revenue. And I can tell you that we don't have the numbers yet. It'll come out of the PEA. But the capital that we incurred to go all the way to a separated rare earth oxide will be very, very quickly paid off by the increase in the revenue that we get.
And how sure are you that the K-Tech technology will actually work?
As I said, we are at this stage about 95% sure. We can only say 100% once we've piloted it ourselves at Palabora, but it's been piloted on phosphogypsum for rare earths in America. It's been piloted on phosphogypsum in North Africa at a large scale for uranium and thorium extraction from phosphogypsum, which is essentially the same process that we will be doing at Palabora, and it's been applied commercially to other industries. So it has been largely de-risked. It's just that final tick in the box can only come with our hand on our heart once we piloted ourselves at Palabora.
Fair point. Martin Curry asks, is there a possibility you might be able to use the K-Tech technology in other phosphogypsum projects in Southern Africa? Have you come across any which might be suitable, George?
It is certainly applicable to other phosphogypsum projects that we might come across in Southern Africa, and we are investigating other opportunities.
Do such things exist, though? I mean, is this simply one-off, or are there actually other gypsum stacks out there, or is it simply not yet known?
Can I plead the fifth?
Yeah, no, commercially sensitive is the phrase I think we use.
Yes, yeah, it's commercially sensitive.
It's commercially sensitive, not a problem. I'm moving on. People have been asking what the 6.4 million placing money gets spent on. It was a good raise. What's that for? Is it possible to break down where that money goes for us? CapEx
Yes.
and the various lines in the budget?
So, you know, part of that is to complete the PEA that we've started at Palabora. It's been kicked off already, which is significant, obviously, in terms of footprinting the profitability of this project and the IRR of this project for the whole world to see. And it's also going to enable me to complete a bankable feasibility study on Palabora. So it's quite significant in the fact that I don't anticipate coming to the market again for funds to complete a bankable study, which will obviously, hopefully, if my knowledge of the project is correct, which will obviously showcase a fantastic project at PEA stage as well as bankable stage. But very importantly, you know, we will be funded through to that stage of the project.
In this latest raise, you mentioned an interesting company called TechMet who participated in the placing. Is it possible to tell us who TechMet are and why that relationship is significant? Why it's a real feather in your cap?
Well, TechMet came in as a cornerstone investor in this raise. They were already a tiny shareholder in Rainbow, but they've now, after 2 years assessing various rare earth projects around the world, they've decided to make Rainbow their preferred rare earth player. TechMet is a strategic minerals fund, which is largely funded by the US government. So the DFC, I think, invested circa $150 million into TechMet last year, and which is, as I said, significant because it's essentially the US government, and the fact that they now are taking and building a strategic stake in Rainbow, I think, is very significant.
Okay, two final questions. I am very cheeky, George. Ian Wright asks, what are the projects that are in the pipeline? Peter Woolston-Holmes asks, what's happening in Zimbabwe? So are there any other projects in the pipeline in Zimbabwe? I can conflate those two questions. What do you make of all that?
So Zimbabwe, we have licenses on prospective rare earth ground that we've pegged. We are just starting a very, very small initial exploration program there, but it'll be a hard rock rare earth project, if it is a project at all. As I said, we need to do the exploration, but it has been identified by the USGS, which is the United States Geological Society, as having the potential to host rare earth. So we're in the right neighborhood, we know that. It's just a question of whether there's anything economic there. And then, and yes, we are looking at other opportunities. That's what I can say in the Phalaborwa Gypsum arena.
More commercial sensitivities.
Yes.
Okay, George, you've been fantastic. Thank you so much.